Welcome to Automotive EV. My name is Peter Wooding and thank you for joining us. A special thanks to Priority Freight, Unipart Group, FedEx, Jeffco, CHEP, Kuehne+Nagel and Rangex for sponsoring this conference. Today, I'm delighted to be joined by Arthur Kipferler from Beryls, who is delivering our first keynote address, EV Mobility, the race is on. It's good to see you, Arthur, and thank you for joining us. So now it's over to you.
Thanks, Peter, for having me here today. Let me quickly introduce myself. I've been in the industry for 30 years now, so let me introduce my company also. So Beryls is certainly a business most of you will not have heard of. That's why I want to spend a minute introducing us. We are a top management consultancy, and unlike many others, we exclusively focus on the automotive and mobility industry. Founded in 2011 in Germany, now with a global network of offices. A team of very experienced consultants, so we don't really have the typical youngsters that learn in their first 3 projects, but we hire people who have already learned in industry jobs and other consulting jobs. But we offer the whole spectrum of management consulting services, from strategy design, M&A services, all the way through performance improvement, implementation help, and digital services, more important than ever before. The way we work is very individualized. As advisors on par with our clients, with a strong interest in long-term relationships and a very deep understanding of the situation and the business context of everything we work on.
So if we can move on over to the slides, Richard. What we've seen really is not a good year in automotive in general for in 2019. The industry for the first time in quite some while declined, and we lost actually 4% of total light vehicle volume and fell below 90 million again. If you see the ICE share has actually declined much faster, and what we call xEV, so this is every vehicle with a plug-in hybrids and fully battery operated vehicles, actually saw some growth. 2.3 million was sold last year. But 2.3 million is not a lot in 90 million overall vehicle sales. It's actually way below 3%. So if we say, are we already at a turning point towards electrification? Probably not if we look at new car sales. If we then look on the right side, you see what that means on a country-by-country basis. And actually, most of the remaining part of my presentation is going through country-specific examples. So what we did here, we plotted 2019 new car registration xEVs versus as a share of total new car registrations. And everybody knows Norway is way ahead. And Norway has actually last year turned the tide, and for the first time, plug-in vehicles were more than half of new car sales in that country. The second best in the world actually is the Netherlands with 15, so big gap. And everybody else is way below. And last on our list here for our big markets is the US, with still below 2%, which really is not a lot and definitely is not a breakthrough yet. I give you a little bit of time to look at that chart because I had not clicked on it. So now let's look what happened actually in the top 5 markets. EVs had a huge success story, actually. If you look at the growth rates, which we see on this chart here, from 2012 onwards, double-digit, larger than 50% year-on-year growth, all the way to last year, 2018, all the way up to 2.1 million vehicles sold. And then, as we saw on the previous slide, 2019, just 5%. Although 5% in a market that overall shrank by 5%, so still some growth. What happened, if you look at countries, you can easily see China, who has so far been the growth engine behind this xEV growth, had actually a slowdown. And we lost 4% of electric vehicle volume in China, 19 over 18. Similarly, in the US, 9% down. Other markets, almost no growth, 6% up. But Europe really exploded, 47% xEV growth. Now over 500,000 vehicles sold in Europe last year. Now, if we break down Europe a little bit further, we actually see our new number one electric car market, Germany. After growth of 59%, we're now at over 100,000 electric vehicles sold in Germany. You see below the little numbers, the xEV share in total new car registrations still below 3%. So although volume-wise, this is now the market leader in Europe, in terms of EV mix, it is still way, way small. And there's probably more convertibles sold than electric cars in Germany. Next on the list in terms of volume, Norway, 80,000 EVs sold, really big number for such a small country, almost 56% share of new car registrations. And despite the high mix, still 10% year-on-year growth in EV sales. UK, the biggest UK EV, Europe EV market, 75,000 sold, 25% up, just over 3% mix. So kind of in the middle. Then Netherlands, huge growth last year, 150% plus, up to 66,000 electric vehicles sold, which was 15% of the registrations actually. So not bad. France, kind of mediocre, below 3%, 1/3 growth, 60,000 vehicles sold. Now, we obviously all try to forecast, and manufacturers really need to forecast because they set up production plants and they have business cases depending on this. And most of all, in Europe, they have to actually reach CO2 quotas from this year onwards, otherwise they will pay fines. So what are the drivers behind EV penetration? No surprise, people definitely need to get used to it. People have concerns, people wonder about range. They don't really know, if you question them, what range they need, so they go for max, because just to be on the safe side. Many EVs currently do not deliver what they are used to from their diesel vehicles. They have concerns about battery life. Will it last? How much will it be worth? How much will it cost to repair? Who can repair it? So a lot of concerns. But one of the real concerns in practical usage is obviously charging. And if we look at the next slide, we can easily see how that drives. What we did here is we took a very simple proxy for charging infrastructure. So we just take the number of charging points in the country and divide it by the number of fuel pumps. So actually diesel, whatever, petrol fuel pumps in the country. And no surprise, our two EV leaders in Europe, Norway and the Netherlands, lead also obviously on public charging infrastructure, both over 50%, meaning the number of electric public chargers in the country is at least half of what the number of fuel pumps is. Now, we all know electric cars are being charged at home, and this partially compensates obviously for the longer time it takes to fill a vehicle at the charger than it would take at a fuel pump. So overall, we can probably say that if this ratio, charging points to fuel pumps, goes over 50%, people generally consider the network fully covered. They don't perceive it as a risk anymore. And then you have one of the factors in place to see decent EV penetration in the country. It's not the only one, but it's really one of the hygiene factors, because if that is not given, people just don't venture out on an electric vehicle, and then they wouldn't buy one. You see the laggards here, the US especially, way behind, only 7% charging points over fuel pumps. No wonder that their xEV share was only 2.1% last year. The next key driver that definitely is in place, has to be in place, and hugely drives electric vehicles is government incentives. Whenever there's a new technology, there's obviously big hesitation, and the government can do a lot to overcome that hesitation. What you see here is the EV sales in China on a monthly basis. And yes, there's always an annual cyclicality and a semi-annual cyclicality. But what really stands out here is the dependence on incentives. So in the mid of 2019, the Chinese government halved the incentives, and you can see immediately a drop-off of the monthly purchase rate for xEVs. You can also see obviously a spike in June, because many people still try to get their electric vehicle before the incentive halved. China has now confirmed the incentives until 2022, but first of all, I would never bet a lot on the announcement of the Chinese government, because they have been known to change their mind and change regulations almost retroactively. And also for a planning horizon of a car manufacturer, 2022 is quite close. I mean, this is the year after next, so that's not long enough as a runway to actually solidly plan your product investments, your product portfolio. So we're back to the uncertainty. And let's never forget, when we look at new car sales, electric car sales, that regulation plays a huge impact, and regulation is inherently difficult to actually forecast. Now, next I look at Germany. What you see here is the top selling electric vehicles in Germany. And obviously, as the volume leader in Europe now, that has happened because supply has increased and there's a lot more models available now. You see Renault Zoe, probably the most affordable, best value EV on the market, currently leads the league table here. And everybody else is behind it. Best-selling model 9.4. I'm going to put this in so you see the comparison, and you see how niche electric vehicles are still in Germany. The Golf alone sold over 200,000 units in 2019, and our best-selling EV barely made it to 10. So there's still worlds of difference between ICE and EV sales in Germany. Things are on the move, though. I mean, chargers are being installed, investment programs are happening, and most importantly, regulatory measures, tax incentives are being put in place. So we saw increased incentives from November last year onwards. One of them was, for example, to reduce the benefit in kind tax for company cars below 40,000 euro, which gives a huge boost to that segment. Germany's company car share in new car registrations is way over 50%. So it is a fleet market, if you want. So any incentive that gives an advantage to electric vehicles in the fleet segment is obviously fueling growth here. Nevertheless, you have the very normal concerns. Where can I go with my EV, and what can I charge it, and am I really going to be happy with it? We had a good start into the year. EV sales in Germany were up nearly 100% in January, but then obviously came the Corona slowdown, and that has had an impact that makes it really, really difficult now to forecast what we're actually going to see in the rest of the year. Moving on to Norway. The basket case, the showcase for electric cars, definitely, as I said before, passed a milestone in 2019. For the first time, the powertrain choice number one was a plug-in. So for Norwegians, it's pretty clear. 56% of new car sales were plug-ins. In a slightly shrinking market, they still managed almost 10% growth. So we all know this is obviously a very happy coincidence of many different forces. We have almost 100% regenerative energy. We have population fairly concentrated in a few big cities where it is fairly easy to put infrastructure. And we had a government that fully bet on this and put all kinds of incentives in place, from free parking, the permission to use bus lanes, free ferries and toll roads, all the way to a very, very heavy tax incentive. And you can see here probably the most important reason why Norwegians opt for electric vehicles. A Tesla Model 3 costs less than the entry-level Golf. And that's simply because in Norway, cars are quite heavily taxed, and for electric vehicle, the government has given up on the taxation. Now, everybody knows that is not sustainable into the long term, but at the moment, this is what drives it. And the hope, obviously, of the Norwegian government is that once people are really used to it, the infrastructure in place, all the concerns are overcome, that buying electric vehicles will be a habit. What's not really clear is whether replacement of the tax revenues lost on not happening ICE sales will come from in Norway. One assumption would be they probably have to eventually increase tax on EVs, which will then make them much less accessible for Norwegians and will bring numbers down again. Or, since Norway is simply a very rich country, they will find other ways to create the government income, so they don't need to tax EVs. We'll see. I mean, overall, it really makes sense if you think we have emissions not really taxed. So in a way, the Norwegian model is taxing the externality the emissions on an ICE vehicle and gives the benefit to the electric vehicles. So proper way to go. Unfortunately, very few governments have this easy tax lever. Many European countries, and especially in the US, there is basically no tax besides a sales or VAT tax on a car sale. So there's really no discount governments can give. And most governments also cannot afford to put such amounts of money into that. Now, I want to just conclude the presentation by looking at the cockpits. What we do is we try to summarize and obviously keep this up to date for the key markets in the form of a cockpit. So what you see here is the first example, which is the US. I'll just quickly take you through. So top left, you see new car sales and the share of electric vehicles. The yellow-orange indicator is 2018. And the blue one is 2018 and the orange one is 2019. So you see here again 9% decline in xEV sales year over year in the United States. We then also plot the vehicle fleet because it's interesting to see how many new cars actually came on the road. Then you can do ratios on how many cars per charger, and you can feed that into your business cases for charging infrastructure, which certainly is one of the problems that holds us back. We then have the vehicle fleet, still very, very small numbers, below 0.5% in the US, because first of all, electric vehicles don't sell much every year, and they haven't been doing so for many years. So it will take a long time to turn over a fleet to be 50% electrified. Then you see the split of PHEVs and BEVs. So the darker orange are pure battery vehicles, and the lighter orange are plug-in hybrids. US actually quite good here. People do not really buy plug-ins. Might also have to do with actually what's available. Then we'll look at the portfolio, what is there. We look at the price premium between an EV and a comparable ICE vehicle. We look at the infrastructure maturity by using that indicator, charging points over fuel pumps. We're looking at regulation, and this is a very simple indicator. It simply shows the cash incentive you get buying an EV at the point of sale. Now, the US has a tax credit, but obviously the trick with the tax credit is it only works if you actually pay taxes, which, yes, most new car buyers will probably pay, but it comes in later with your next year's tax return and then the reimbursement. So we didn't put that on here. Obviously, you could put it on there. And then the US on the incentive side looks slightly better because a $7,500 federal tax credit is not bad. What we also have in the US, what you don't see here, is incentives state by state. So in certain geographies, you might have an incentive, but that is not obviously nationwide. So we didn't plot it on that. An interesting driver of EV penetration is obviously EV availability. In which segments, in which models are EVs available in the market? Now, the US, as you know, has a huge pickup segment. So about 3.5 of the 17 million new cars sold are pickup trucks, and there is, as so far, no electric option in the pickup segment. So obviously these people will have a hard time finding an electric alternative. Nevertheless, in America, you now have the same amount of, simply counting them, of electric vehicles available that you have in Europe, and yet penetration is so slow. So again, each of these factors driving penetration is not driving it by itself, and there is no single winner. It's really the combination of all of them. You need the offering, you need the price attractiveness, you need the charging infrastructure, and you need a certain momentum behind it so that consumers actually consider, hear from their neighbors, and hopefully we'll all walk up that double S curve that we're expecting. What you then also see on the right is the top selling EVs. No surprise here, Tesla obviously on the number one, and a plug-in right behind it. And we all know how rare Prius Prime, the plug-in Prius, is. There's not much happening in the US. Let's look at the next country. We're going up by EV penetration, so the next one would be Germany. Similarly low new car sales penetration, similarly low fleet penetration, a more 50-50 split between plug-ins and BEVs. Will probably change in 2020 quite a bit because of the now very advantageous company car tax on plug-in hybrids, and obviously for all consumers considering a switch, the switch to a plug-in hybrid is much less risky and concerned than the switch right to a battery electric vehicle. In terms of segment coverage, we see that actually 25% of the segments now have an offer, and there's very few segments where we still do not have an electric option. So the excuse of Germans, I cannot find a vehicle that fits my needs, is slowly going away. But we all know there's still supply constraints. So even if in theory there's a vehicle in the price list, you might have to wait a long time. We all saw the stories last year about Mercedes EQC being offered but not really available because of battery shortages. Obviously, manufacturer was quick to say, no, there's no battery shortages. Yeah, but then why do I wait 9 months to get one of them? So it's all still a little bit intransparent, and I guess all players in the industry have to first learn how to do this. But clearly, the incentive now in Germany, if you look at the middle, at the bottom, with the new incentives since the end of last year, there is really no more premium for EVs. The government incentives fully compensates buyers, and they pay the same amount of euros for an ICE or a BEV vehicle. And that is a straight outright purchase price subsidy, no tax credit. You have at the moment you take the keys for your new car. Interesting maybe here to the right side in the middle, who are the suppliers of charging infrastructure? Definitely the big utility companies. They see this as a new sales channel for them. Electricity will be needed in big quantities. But you also see people on here like Ionity, number 9. Ionity is a joint venture originally set up by a few of the German car manufacturers. Probably a little bit learning from Tesla that express charging infrastructure along motorways is an important enabler to actually make people consider EVs. So they're putting express charging stations on all the highway rest stops so that nobody needs to be afraid to get stuck if he has to drive from, I don't know, Frankfurt to Hamburg, which obviously is something very few people do on a daily basis, but is often quoted as a reason not to buy an EV. Next country on our list is China. Clearly the volume leader, you see 1.2 million, we saw that before, sold EVs. Very big part of that, BEV. So plugins are still a kind of a niche product in the electric vehicle space in China. And the regulation goes in and out if they're actually considered proper EVs. There's minimum ranges that you need to have. So many of the plug-in light versions with 25, 30 kilometers of range do not qualify anymore for any incentives. And so it's only plugins with more than 50 and in the future 80 and 100 kilometers will actually qualify. So there is a bias against plugins and for BEVs, which is honestly speaking no surprise if you hear the anecdotes that many plug-in lease cars are being returned after 2 years with the charging cable still being in its original wrapper. A lot of people in European markets buy plug-ins or simply order them as company cars to get the tax incentive, but they don't really plug them in. And then we really have achieved nothing, because a plug-in that's never plugged in is worse than a normal mild hybrid and just increases the overall emissions and doesn't do anything for anybody. Infrastructure maturity in China, increasing. Government there obviously is investing rapidly in this. Over 500,000 charging points are out. But a simple little comparison, if we take the density of charging points from Holland, or the Netherlands I should say, and extrapolate that to the size of the market in China, China would actually need to have 2.3 million charging points to have the same density. So you can say 500,000 is a lot, but compared to what we see in some European countries, there's still quite a ways to go in China. Obviously, we don't know any of the top 10 charging point providers because they're all Chinese energy companies. And we also, if you look at the top right, don't really know many of the cars that are sold in China, because it's very much local Chinese products that are from a price point really below what we are used to and what we are asked to buy in Europe. The only foreign model in here is a Tesla Model 3. with 30,000 sold. Obviously, that will explode in 2020 with local production in the Tesla factory in China. Next country, Netherlands. Very early on, one of the innovators in the electric vehicle space. The interesting story here is over the years, whenever tax incentive ended, electric vehicle demand collapsed. And then the government looked at it for a while and concluded, well, it's not enough. We haven't achieved what we needed, and put new incentives in place. And this has happened twice already, and we're currently again in a ramp up, obviously. And we'll see another collapse at the moment when that incentives ends. So as I said before, there's really this trade-off to make for governments. How long do I need to push this? And yeah, is this affordable then for a government? Yeah, again here, if you look at top 10 EV sales, Tesla Model 3, clearly leading, Hyundai Kia together, number 2 and 3. Nissan Leaf. What really stands out is the European manufacturers are missing. We're all waiting for the ID.3 to finally make it into the rankings of top 10 vehicles. The BMW i3 is just a little bit too much of a niche vehicle. I have one myself, I love it, but it's not for everybody. So it never made it really into big volume sales. Last country on the list here, finally, Norway, just to conclude on a very positive note, the EV country, number 1 in the world. Combination of infrastructure, monetary incentives, and the real convincing sustainability aspect here, since all electricity in every plug in Norway is actually nearly 100% green. It totally makes sense for that country. And there's a nice mix of vehicles in here, the same place as elsewhere, obviously, but in very decent numbers. And don't forget, Norway is a very small car market overall. So over 55% of the new cars sold are already electric. And the remaining cars probably really cannot be electric. In these numbers, we have, for example, a lot of light commercial vehicles in Norway that go long distances, where if you leave the big cities, charging infrastructure really becomes an issue. And probably for some of these use cases, an ICE engine will remain the best and by far appropriate powertrain. Now, that is the run through the countries. I want to conclude with a lookout on 2020-21. And unfortunately, it's not a very precise forecast, because more than ever we do crystal ball reading for the next 2 years. For 2 reasons. First one obviously is Corona. Corona has many direct and indirect effects on the demand and the supply side of electric vehicles. And most of them are actually negative. So we have definitely this whole slowdown of consumption, the uncertainty among people about their income, about their jobs. And do I really want to spend 45,000 euro now on a new electric vehicle, or do I keep my 3-year-old Golf, which is perfectly fine, for a 4th year? We also saw a discussion and partially a rollback on environmental regulations. The industry is in trouble. Do we really need to know? Do we really need to have lower CO2 fines this year, where everything is already critical? So that is definitely giving ICE vehicles a new and unexpected tailwind in some geographies. We have, thirdly, a depressed oil price. We had a slightly negative oil price for 1 day during the lockdown period, very surprisingly, but it's back up to the 20s and 30s per barrel. But definitely the switching incentive for commuters, especially who drive a lot of miles, is obviously smaller the smaller the oil price is. Then we also have an impact on the supply side, because there might be some launches that are delayed, and definitely there's a delay in production since many factories, so you could basically say virtually all factories were closed for up to 3 months worldwide, and all the vehicles that were supposed to go on ships didn't go. So there is definitely a shortage of electric vehicles throughout 2020 and probably into 21. The positive side here is really that within all those government support programs to get the economy started again, there is a green connotation. There's a real intention to focus on sustainable measures, and as we saw in Germany, there is really a new incentive on electric vehicles, and not just a general purchase incentive for cars. So that might partially compensate the factors that are listed above. And then obviously the drivers that we had before are continuing to strengthen mostly the xEV demand. We know that in Europe, the CO2 penalties for the first year in 2020 are actually live. So manufacturers who do not achieve their fleet mix will have to pay quite stiff fines. So they have a real incentive to drive cars into the market, control their xEV mix to hit that target. This will increase accessibility, as we call it, simply meaning there will be discounting and very attractive leases. And then a driver that's real fun is that there's so many new electric vehicles are being launched from all brands at all price points in very many different body types. So choice and eventually also supply should be not an issue. Supply, as said before, probably in 2020 is still a constraint, but it should also loosen up in 2021. So overall, we will definitely see obviously a shrinking vehicle market in 2020 over 2019 because of the production stops, but we should see hopefully an increase in EV penetration. With that, I would really like to open the floor for questions. We have about 10 minutes left, so let's see what you have asked in the meantime.
Okay, first question. You mentioned the BMW i3 being a niche car and not for everyone. Can you clarify what you mean by that particularly?
Well, I think BMW had a real strategic intention with the car when they designed it from 2010 onwards. They wanted to design an urban transportation vehicle. And so the vehicle is really made to be a city car. Now, what they have underestimated is probably that many people buy their car as a multi-purpose vehicle. And yes, they use it 99% or 95% of the days as a city car, but then they always have in mind, I'm going to go on vacation, I'm going to visit grandma, I'm going to do this and that, I go to IKEA once a week and God knows what. So a city car is not that appealing because it simply does not meet that option value that a general purpose vehicle has. It is range to an extent because an i3 was never designed to do 300 kilometers on the motorway. In a city, you don't need that. Ours in London never goes below 60% level of charge because it's really hard to drive further than 100 miles within London. But obviously, if you go on the motorway, that changes. And then I think we can all agree it is also very much a polarizing design. You either love it or you hate it, a bit like Marmite. And most people actually don't love it. So that definitely held it back. And then lastly, it's very expensive. It's full of high-tech features. It has a carbon fiber body that costs a lot of R&D and production facility investment. And it's a small car. So most people still kind of correlate purchase price with size. And so here's something that's really well made and well engineered and perfect for a certain purpose, but it costs an arm and a leg compared to other cars of that size. So yeah, it's a niche product. So what manufacturers have learned from that is to make general purpose EVs. And you see most of the launches that we have now are really vehicles that are electrified versions of standard cars. So consumers can pick, I want this compact SUV, I can pick either I get the petrol version, I get the plug-in version, or I get the fully battery electric version. It makes it a lot easier to create market acceptance and find customers.
So personally, would you be expecting then the i3 Golf to really be the game changer over the next years? In Germany specifically?
In Germany, very much so. I mean, I always think back to the minivan example. There were minivans for decades. Germans didn't buy them. There was Renault Espace and Chrysler Town and Country, and a few people bought them, but it was a total niche product. And then Volkswagen launched the Charan, and suddenly hundreds of thousands suddenly bought a minivan. So the Volkswagen brand just opens any vehicle concept to a much bigger demand that you don't get if you're an import brand. And if now there is a decently priced, good looking, and from the specs, I don't think anybody really has been in one, but from the specs, it looks like a well-performing vehicle at a good price point. That should definitely change the picture in Germany. And there's no doubt that when we do the top 10 selling vehicles, EVs in Germany in 2020, Well, in 2021, ID.3 will be on the top. In 2020, it all depends when they finally start shipping the cars. We've all heard about the software issues they have and the danger of the launch being further delayed. So it's a real supply issue. But vehicles like that, domestic brand, core of the market, biggest segment in terms of body type and price, that will have a huge impact.
What's your thoughts as well on the commercial market? You know, we want smarter, cleaner cities. Are vehicle manufacturers doing enough to actually get themselves into an EV small commercial business vehicle?
Yeah, quite surprisingly, manufacturers started with passenger cars. They probably should have started with vans, delivery vans. All the big users of delivery vans, be it Amazon or FedEx or DHL, are looking for electric vehicles and they can't get any. There's a real supply shortage. There's an electric Sprinter and just not enough of them. So huge waiting lists. People want to turn their fleets around. In many ways, it's the ideal use case because the vehicles tend to come back to the depot. On the depot, you can have overnight express charging. The mileage per day is within the range, so it works. And companies are looking for green credits. An electric vehicle fleet is what they need. But we have to wait another, I would say, 12 to 18 months until all the options currently in the R&D pipeline have actually reached the market and there's enough supply to shift over bigger fleets.
Is the infrastructure, in your opinion, slowing down the actual uptake? You mentioned earlier regarding range anxiety, which I think people don't really have if they looked at what they use, but you do want to be able to get somewhere when you're going further and not to have to think about charging for half an hour or an hour or two even. You know, what else can be done apart from sort of fast charging systems?
Well, you can't really do much beyond putting fast chargers up. The question is, where do you put them? Obviously, the first step, take the UK example, was to put one along the motorways at all the services. That was done. So there's now 2 or so at every services. What happens if 3 cars arrive at the same time? Well, you have to wait 30 minutes. That's something that beyond the early innovator, people will not want to do. Because even in holiday rush hour, you don't wait more than 10 minutes for a fuel pump. So we definitely need more. A lot of them are being installed. I think they are partially installed in the wrong places, like in residential areas where you don't need express chargers. People can slow charge overnight. So that's really support home charging and support trickle charging from street lampposts and things like that. The big problem, I think, with the charging infrastructure is the lack of a business case, because they are very expensive to install, especially if you want charging performance over 50 kilowatts. Very often you need to rewire the place because there's not enough energy capacity in that specific location. So you need to go back to a main transformer station, kilometers of wiring that costs hundreds of thousands. And then you put it up, you open it, and very few people come because, as we saw, there's like 0.5% of the fleet is electric. And if you look at user statistics of EV owners, most of their charging is done at home. So there is very few who actually use those public chargers along the motorways. So they sell very little electricity. Now you have 2 options. If you take the Ionity option, they went for high price. You pay 79 cents for a kilowatt hour at the express charger. That's like 4 times what you pay at home. So with that, obviously your theoretical cost of ownership advantage of an EV is being eaten up. If you charge your EV only at Ionity chargers, it costs you more than a diesel vehicle. So no point. And then so people will only use those in emergencies, which then again, so the business case is very shaky legs, and it's a bit of a chicken and egg. If there's more cars, there can be more chargers, but if there's not more chargers, there won't be more cars. And we still haven't, in most markets, we haven't gotten beyond that. The Netherlands has gotten beyond, and Norway has gotten beyond. There, it's no more issue. There's chargers everywhere. And there's price competition among the charging operators, so there's decent pricing also available.
Is there enough charging points within business environments? Or from an office perspective? Or?
Yeah, interesting aspect, because especially in markets like the UK and Germany, where the company car is still very popular, more than half of new car sales are company fleets. Most of those people who use their company car to drive to the office then cannot charge at the office, because the investment in putting charging infrastructure into every parking lot is just, there's no payback for a company. I mean, I work in the car industry, so the car companies all did it. They all have charging points everywhere because they kind of have to sing from their own song sheet. But any other company is like, well, sorry, we can't afford that. It's enough to provide parking.
Another question is there enough battery production capacity to allow for a continued growth of the market?
If you include the pipeline, yes, because a lot of battery production capacity is in the making. Plants are being projected and permitted and built all the time. Yeah, and there will always be, in the next few years, this kind of peak cycle. So we will have too many batteries at a certain point, and then we will have too few batteries at a certain point. So for manufacturers, it's key to hedge those bets and lock prices in when they're decent and not have to buy when they're not decent. But yeah, battery capacity will ramp up. Currently, there's definitely a bit of a shortage because a few big factories are just being built and haven't come on stream yet.
Well, thank you, Arthur. I think we're getting close to time now. Any takeaways would you give for anyone that's thinking about even going into an electric vehicle?
Just do it. It's a fabulous driving experience. Not only my experience, but statistics show that people who've made the switch don't want to go back. And many of the concerns that you have as a car user about range and charging, once you've done it, the concerns kind of go away and you get used to it. There is charging available, and you don't really drive that far most of the time. I mean, it all depends on the use case, but the majority of consumers are probably pretty fine with 100 kilometers range, which you would never accept for a vehicle. And then if you have 300, you're more than fine.
Thank you.
So try it out. Trying it out is the key thing to do.
Yeah, I think that they're beautiful to drive. They're smoother. They're quiet.
And really fun.
And we don't need to have the anxiety, really, do we? So.
No.
But also, there's a number of people whose home situation doesn't allow for charging at home. And that obviously will impact on really the number of uptake.
Yeah, but again, like with many things in life, do the easy part first. If all the people with a garage and a driveway get an electric vehicle who can very easily charge from their house, that's already a substantial part of the population, a lot more than 0.5%. So let them go first. Exploit your advantage that you have if you have a driveway, and then we'll find solutions for the others. Around here, around my house, the city has put trickle chargers into every second lamppost. So you can just park on the street and plug your car in. Maybe you don't find the one every night that's free next to the lamp, but every second night, and that usually is way enough to keep your vehicle charged. So again, with practice and experience, people will see that many of these concerns are not really killer issues.
So it's the time really to just do it. Take the plunge,
be a bit experimental and try some new things. Yeah.
Perfect. Thanks again, Arthur. Thanks for everyone who's watched, and to remember that it's the full session will be on catch up, and a great start to a week of EV. So thank you, Arthur. Thanks, everyone.
Thank you, Peter, for having me.
Bye. Thank you. Bye-bye.